welcome to the TraderMerlin show. It is your, what are we on? We're on Thursday? Yeah, tail end of the week, Thursday. That's right, because I remember Sean Reed is going to be our guest today. Yesterday, we had, at least there was an error on my part in not understanding a question, and I actually didn't even know that you could do a specific action in the marketplace. So we're going to talk about that here in just a second. We are going to spend a lot of our time talking about unlocking options secrets with Sean Reed, who is going to be our guest today. Joining me, I'm assuming from cold and somewhat rainy Northern California. Sean, how you doing?
Yeah, a lot of the locals here are complaining that the weather, they're waiting for the weather to break. But I had to deal with snow like 2 weeks ago, like everywhere, driveway shoveling, and I don't mind the rain. Actually, it's better than the snow. Temporarily, it's better than the snow right now.
Wait, you know what? Take the snow while we got it. Let the snow pile up.
Yeah.
Let me ask a question real quick here. I got this one yesterday, and I think I misunderstood it, but I didn't ultimately. I just don't understand the topic because it's not something that I do. And it was funny because not only was my group giving me a hard time about it because how could you not know this topic, but I guess over on Don Fran's channel, they're laughing at me going, Merlin doesn't know what a poor man's covered call is. So let's shed some light on this one. Betty, you can give the best answer here, but way better than I can because I totally was wrong yesterday, and I'm fine to admit that. Betty says, if I buy a call 500 days out and I think I can sell calls against it, if that's true, what happens if the credit trade goes against me? For some reason, I didn't think I knew about diagonals, I know about verticals and all that different calendar spreads. I just wasn't sure that you could sell an option on an option, and I guess I was totally wrong. So how about you help me figure all this out and get the real answer for Betty out there?
Absolutely. And the first and foremost, I'll go back you up a second. Going out 500 days, you're gonna pay a lot for that long option, long call. Normally people kind of just do like a leap, which is like, I don't know, a 300-day expiration, and then you sell calls against it. Your broker assumes that your so the thing with the debit long call, that's covering some of the exposure, because then that's not a naked call that you're selling against the long call. And so the broker doesn't consider that naked, and then you use and go long a call to reduce your costs, because buying shares sometimes can be expensive. It's $100 stock, so just do a long call, maybe cost you $1,000, and then sell calls against that debit leg, and you repeat it. So like, let's say you sell like a 300-day expiration, you buy a 300-day expiration long call, and then you sell like 30-day expirations against it. And, if you ask, well, what do you do if it becomes in the money? Well, what is selling a naked call? Could that be unlimited upside exposure? It could. Your broker's going to recognize that for to some extent. And if the short leg is going against you, you should be making at least some offset with the debit leg. So sometimes people think of the blow up scenario, but another thing you have to consider is that, do you have to hold for full expiration? And I'm a big advocate of, you jump into a credit trade, you get a pretty good sizable, a reduction in your premium, and you get out of the trade. I don't know. That's kind of, that's kind of a starting conversation. I don't know what other, comments we want to go with it.
No, it's the thing I like is just some clarity, because it's not something that I do. Like typically in those accounts I'm doing, if I'm selling covered calls, I'm holding the underlier outright, which is just the way that I've always done it. And some people, the poor man's covered call. Okay, fine. That's a new one to me. I probably won't find myself doing that, but okay, I stand corrected in to Betty's question, because I was like, no, you can't sell an option on that specific option, but that's not what she's doing. She's selling options against. It's not specifically the option, because when I read the question, I thought she has a 500-day call option and she's selling options on that specific 500-day call option. And I was like, okay, I don't think you could do that because there's no option market.
No. Like typically, and 500, that's a lot. You're going to pay a lot for those calls. I don't know. Maybe I'm the poor man. I maybe do like a 300-dayer and then sell 30-day expirations against it. You know what I mean?
Yeah. Yep.
And then as far as taking heat on the trade, if the short leg becomes in the money, who's to say you can stay in the trade? Could you just manage your risk on that trade? Because again, some of the offset will be the debit leg that you're running.
Right.
I will tell you this though, in my travels, you're very similar to me. We've been in the game for a long time. And anytime I come across like old school, consistent options traders, they implement one of two strategies. It's either spread trading, or it's poor man's covered calls for monthly income for themselves. So to me, poor man's covered calls is a viable way to trade. it is a viable strategy, and it's a way to create a revenue stream for yourself in that regard. So it's either spread trading or poor man's covered call is usually what, by and large, like the consistent, like people that have been trading for 40 years that you bump into. I don't know if you've come across anybody.
Well, clearly not, because I didn't know what a poor man covered call was. So, so obviously no. But knowing that, I might look into it. I mean, if it's going to be a better use of my capital versus buying the underlier, then sure, that makes sense over time.
And it works well with stocks that are kind of like an iron condor, where it's slightly trending up. So you don't want like too strong of a trending stock, but because then it can come against you and you can become in the money on your short leg. So you would normally want a slightly uptrending stock, not too strong of a trend, but sideways to slightly uptrending stock is usually what you're searching out to do this on.
Cool. There you go, Betty. Hopefully you got an answer to that one. Today's topic was not that, by the way. That was kind of an offshoot. I want to get that out of the way since I'm getting heat for my lack of knowledge on what a poor man's call is. Today's topic is actually this right here, Unlocking Open Interest Secrets with Sean Reed. I wanted a nice portal to the unknown with all kinds of numbers and cool things around it. And I had this animated picture of Sean that I thought was a pretty good one as well. He looks very serious. He got a nice chiseled jaw in this AI generation of you, but takes me a while to find the perfect picture. Let's talk about open interest and kind of what are the perks, benefits, and little secrets that you use in your day-to-day that you think might be beneficial for my viewers.
Well, first and foremost, I can give you a cheat code for future AI pictures of Sean. Just do Dale Earnhardt Jr. cartoon, and it's like spitting image of me. Anyway, that's a little cheat code, just for what it's worth.
Now I know, and knowing is half the battle, according to G.I. Joe.
Out of any celebrities, I think I kind of look like the guy. Anyway.
Nice. Good. I don't know if I look like anybody. They say I look like the guy from Beverly Hills 90210, but maybe when I was younger. Now I'm just a balding man, so I don't know who looks like me.
Yeah, apparently, yeah. The glasses are actually new for me. So now, so I at least I sounded smart, right? Now I think I might look like I'm smart. Hopefully,
yeah, you look pretty smart.
Anyway,
all right. So let's talk about open interest. This is one that I get a lot of questions about, like how do you utilize it? And you mentioned, our call the other day said, let's talk about the kind of unlocking secrets of open interest. So what would you deem to be a secret of open interest?
First and foremost, I think that, strangely, I haven't come across any writings about it. And, you trade options enough, you start to see some things, see aliens and see some things in the open interest. And in all seriousness, where you stare at these things long enough, you start to uncover some of these things. And, as an options trader, you don't look at volume because, options are usually thinner. So instead we look at open interest. And sometimes people want a definition of what open interest is. So I can start there to where, think of it as an intention to buy or sell. Because if you think about it differently, an option isn't completed till the end of expiration. So you have people buying calls, or selling calls, people buying puts or selling puts. And so it's kind of a one-sided trade with intentions to buy or sell. Because again, the option isn't completed till the end of expiration. So it's a little bit fuzzy. Because sometimes people want to put it, well, no, did somebody buy an option there? Well, it depends, right?
Right.
So open interest, the way I like to view it in my feeble little brain is that it's an intention to buy or sell. Okay, and it's up to you to understand where they'll be positioning the trade. So we can actually look at open interest in an option chain to kind of give you mindset of those individuals that might have a lot more money than us. Okay, mainly banks or institutional type orders or big money type trades. And so not only can you tell, and cross-reference it with your supply and demand levels, you also can identify, for instance, like the spread traders out there that are pulling massive positions. So I guess the tagline that I always like to share is that, Wall Street tries to hide what they're doing. I mean, you and I come from a very fast-paced scalping background, where they, hide their orders, hide your size, you display it on the NASDAQ level 2, like 100 shares behind that's like, 30,000 shares. Surprisingly, in the open interest, it's kind of cards read. There's really not hidden size in the open interest. So it's one of the few places I like to tell people that usually cards read under normal circumstances. So if we don't get anomalies like, terrorist attacks or war invasions or the curveballs that can be thrown at the market, normally a stock will respect large open interest levels at the various strike prices in an option chain. So like, you see large open interest and then And you look at it today and you come back 2 weeks later, you're like, wow, it ran up to where there was a large open interest and it rolled right back down. If that
Right,
makes
and
any
that's
sense.
yeah, it does. And I was going to say, so it kind of sounds like what you're saying is that if there's a huge block of open interest, let's say an anomaly type of open interest, that it acts kind of in confluence with the supply or demand zone. So it is maybe potentially identifying demand or supply based off the open interest group. But if I can coincide that with the price chart, then I have a double level of probability on my side.
Absolutely. And so can you use it as an odds enhancer to cross-reference your supply and demand? And without a doubt, like I'm a believer. And to me, anything that you or I, comes out our mouths, I very much see it to believe it, so it's like trust but verify. You need to go look at these things and identify and see what you think. But these are things that, I look for, that I also work and show other people to look for as well.
So with regards to open interest, obviously there's multiple blocks, so you get certain strike prices, and as you go down that option chain, you'll see a huge block here, huge block there. Do you kind of ladder your trades like that? Like, okay, if I'm setting targets on specific things, or if I get to this first area of open interest, that's a price, let's say 4 or 5 strikes higher, I'll look for the next one, kind of setting targets 1, target 2, using that.
A little bit. I look at the chart first and foremost. I'm old school chartist, and to me, it's like, do I pick like I guess I could share my screen. I could pull up a couple charts, or I'll show you a couple option chains if you'd like. But like, let's say it's $100 stock, and you
You're
see a
welcome to share
level.
your screen if you want. I mean,
Okay, absolutely. Let's say you pull up $100 stock, and you see, a price level or price pivot at 95, and you also see a price pivot at 90. You're like, okay, which one's more substantial? And if you go look at open interest and you see this massive block at 90, you're like, oh, okay. And then I guess maybe 90 would be a good strike price for me to choose. What's also interesting is not only can you tell where they're at, but sometimes, let's say you won't see any open interest at, let's say, a 30-day expiration, right? You see open interest at 90, but not at 95, or vice versa. Let's see, I'm sorry, back up. A 30-day expiration, you see a large open interest at 95, but none at 90. But then you go look at like a 45 or a 60-day expiration, all of a sudden you see a fat open interest at 90 that you didn't see on the 30-day. So what that is telling you, that the banks and institutions maybe think that it can get down to 90, but not in 30 days. They may look 45 or 60 days as the possibility of it getting down there. So what I like to tell people is not only can you kind of tell where they're at, you also can also identify how long or how much time they think it may take to get there. So it's like a roadmap. And under normal circumstances, does a stock respect those open interest levels? And if you'd like, I can share my screen if you'd like.
sure, go for it. Yeah, no, it's interesting that you say that you can kind of utilize it to gauge expectations for institutions, or not necessarily institutions, or just the heavy hitters based off that open interest volume. And you're right. If I look at something that's out 30 days, okay, well, it may not show up as being a demand zone, but if I go out 60 or 90 days, then all of a sudden it starts to show up, so you can gauge kind of what the expectations are. Kind of cool.
Absolutely. So let's do this here, and let me know if you can see it. See my screen?
Yep, we got it.
Cool. And so here, for instance, we're looking at AMD, right? And here's a 29-day expiration, and this thing's $100 stock. And if you're to say, okay, so where are the players? What are the banks and institutions doing? And surprisingly here, that you can see this chunk here. You can see it's a chunk here. This might even be hedging. Specifically that this is at the money. That might be some sort of hedge, unless someone's doing an at the money put credit spread. So the fact that this is 100 strike and this is a 95 strike, okay, but normally I'm not a big fan of being so close to the action. Okay. And the fact that these line up with the big chunks, and they line up with it in $5 increments.
Mm-hmm.
Because when people do spreads, they love to typically do 5 wides, unless it's like a $300 stock, they might do a 10 wide. And so what's surprising is, like, what if this was someone sold the 95s, bought the 90s? So it's a 5 wide put credit spread. Now the quantities don't quite match up, but this could be somebody selling puts.
Right.
So like, 12,000 of the 21 could be somebody, doing a put credit spread. And if you think about the quantity and the math involved, even if it's a spread, it's still probably $5,000 maintenance times 12,000 contracts. So these are multi-million-dollar trades. So when you look at open interest, you can identify, where the players are. And, we can run over to a chart just for giggles on AMD. Here's a daily chart. And, where are some of these levels? Well, 95 is kind of this little pivot. The 90s are at this. It's an opposing wick. We probably have to go down to like a 4-hour to see it. But yeah, here's the 90s,
Yep.
which just kind of verify the fact that we have open interest there. It verifies this pivot, and it also verifies kind of like the 95s.
Right.
Now, for me, I normally like to go further down and accept the lower premium just because I don't like to sweat trades. But it's kind of fascinating, to me. If you know what to look for, you can see quite a bit of identification when we look at open interest. And one more thing I'll mention is that you kind of have to respect what normally plays out, where it's buy low, sell high. So if you see large open interest on the put side, below current price, they probably want shares to be put on them. Vice versa, if you see large open interest on the call side above current price, they probably want shares to be taken away. So like AMD, if you say, okay, well, here's AMD trading at $100 a share, where does it start to get congested? And here's kind of an at the money. It's not what we want to look at. But check it out. So 23,000 of this particular call probably is a call credit spread. And then the remainder is probably some odd 14,000 contracts. Someone's probably selling calls up there because they have a fat position and they're selling covered calls for income. And again, if you think about the math involved, what if we just talk about the call side to where, what did we say? 14,000 contracts times $2 premium. I mean, that it just blows you away how much money's involved with some of these trades. And chances are, to your point, Merlin, it's probably going to have a hard time getting above 110 in a 29-day expiration, because when it gets to 110, those calls are going to be sold. Those shares are going to be flooding the market to where, shares are going to be sold if it gets up to 110 in 29 days.
Right.
So then if you go back to the chart real quick, and we can scoot back to like, maybe a weekly, right? The 110s puts it like right here, magically, where there's, a substantial pivot. So whether you love AMD or not, I hate to bear it news to you, it's probably not getting above 110 in 30 days.
Right.
You know what I mean? So again, it's like you kind of need to be intuitive. You kind of need to know what to look for. Buy low, sell high. You kind of have to adhere to that ism. But it's amazing how many of these clues that you can get where you wouldn't get other places. Anyway.
Well, and I think it's important to have, I would say, a good instructor or someone to explain it to you, because I've used it before in the past. I personally didn't get much benefit out of it, but I would probably argue that I didn't really know how to use it properly. Looking at those numbers, just because you have a big number there doesn't necessarily mean that things are going to turn. I like how you were looking at a conjunction saying, hey, you got 37,000 here. There's 24 out of this one, or 21 out of this one, which means there's 14,000 difference. That might come into the market and pose a problem there. So, yeah,
right.
23 versus 37 is what I was referencing.
Yeah, that's what I'm referencing, because somebody's probably doing a call credit spread, looks like. And strangely, this might be an iron condor. So they might be selling the 95, buying the 90s, and then selling the 105, buying the 110s. So this may be the same person, believe it or not, doing an iron condor on AMD. But we can see this here where this is, lopsided, where there's at least like 14,000 contracts there, to where that's probably somebody selling covered calls. And to your point, it won't necessarily roll down at 110. My comment was very pointed, where I said it's going to have a hard time getting above 110. Right. You know what I mean?
Yep. I got you.
Kind of fun with that. We could look at one more real quick, and sometimes they're a little thinner. I don't mean to take too much time to show this, but
Do what you got to do. I have a bunch of questions coming in. I only got you till 35 after, so well, no worries.
okay,
We'll bring
okay.
in another time too.
This will be my last little example. So here's Crocs. The plastic shoes, right? And trading at 120, right? And if we come into the open interest here, what are they doing? And the fact that you can see like a 130 and then a 128 here, so they're probably doing a put credit spread. Now, granted, this is a thinner stock, but still, this is what people are doing to generate revenue. And I don't know how many contracts, Merlin swings, but 100 contract trade is still a pretty big trade.
Yep.
And especially this is $120 stock. So this is probably some individuals that are selling the 115, buying the 110s for monthly income for themselves. So this is probably a spread trader. And the fact that this 133 kind of lines up with the 128s, and here's another one, the 114, 109s. This is probably another one doing a 5 wide put credit spread. And you may not like Crocs, but same thing, could you, take a look at this to see if you like it? And is there any levels there? We can lastly go look at the chart real quick.
On Crocs, huh?
Yeah, right. And the medical industry is what keeps this alive, right? But there's some pivots here, and most nurses and doctors will admit that, that's single-handedly kept them alive. And so there is definitely a pivot there, right? And other people think the same lines, right? To where it's a put credit spread, which is a bullish trade, to where they think it's going to hold this level, and did a put credit spread for income. Anyway.
Alan says there's no way you can do that. Maybe if you see those orders at the strikes for the same size, but off of open interest alone, there's no way you can know what anyone is doing, whether they're buying or selling. You're right, Alan. He's not saying a guarantee that someone's doing it, but the probability when you see those big numbers like that, like 133 and 128, and on a very thinly traded security like Crocs here, it would be suspect and be pretty obvious that there's most likely a spread trade going on where you've got those two strikes and that kind of volume. So I thought that's what he's saying. He's not saying there's no guarantee that that's a spread, but the probability is fairly high when you have big numbers like that on something that's so thin.
Yes, and it's kind of like a roadmap. And what's also interesting, like I said, trust but verify. So what you could do is write down Crocs. You could write down today's date, and you could write down the 115 to 110 level, and then circle back, a month from now and say, you know what? Oh my goodness, look at that. We saw that on Merlin's show like a month ago, and sure enough, it came down to like 113 and it bounced and pivoted and shot back up again. And you're like, wait, we saw that like a month ago. You know what I mean? So there's no guarantee, but are there clues in the open interest where we wouldn't otherwise get a clue, if that makes sense? And that's the premise.
Right. No, I get it. All right, let me go through some questions here. I got quite a few to go through. Let's see. Pepe says, can you ask Sean what's the easiest option? Actually, hold on. Before I get to that, I got one above you. Since you have your option chain up and running here, David Gordell says, hey, Merlin, I sold an iron condor Monday on X, so U.S. Steel. Maybe you can bring that symbol up there, and we'll just do a little analysis here. I don't know. U.S. Steel, and he says it's on the April 21st contract. The strikes are the 20 by 23 and the 29 by 32. Could you guys look at that? I got 70 cents worth of net premium. So a lot of information there in one little thing, but he's got the 2023 strikes and then the 29.32 strikes on that bad boy.
Okay, we can take a look at, first and foremost, rather than going looking at the option chain, I'd probably rather go to the chart.
Yep.
And, my first and foremost is look at the weekly. It did drop below the moving average in the weekly. I'm a big moving average guy. It is trying to hold this level. So yes, it's below the moving average, but it's trying to hold this level. And across the board, a lot of utility commodities are dipping. I've seen a lot of excuses. The only thing that kind of makes sense is the dipping US dollar. That might make more sense on some of why the commodities are having a hard time. But with that said, what strikes you picked? You said the 22 20s?
The 20 and the 23?
20 and 23. Okay, so you're probably okay on it as long as it respects this level.
Mm-hmm.
And then you said the 30 32s?
29 32.
Yeah. And the only cautionary tale, when commodities recover, they really recover. We can see some of these snap days, but you're probably far enough away. If I go to the daily chart, normally my jam when I sell like a credit spread, whether it's an iron condor or a one-sided credit spread, I usually like to be kind of two levels above current price, and you're there, so that wouldn't be terrible. And then two levels kind of below, and you're kind of at the
Is it one?
22. Yeah, yeah. So
Yeah.
you're kind of down here too. So that's kind of where, right in line where I would be as well, because then and you want to find a stock that's kind of slightly sideways.
Right.
And the strikes aren't that bad, and just make sure that it holds this level, and it looks like it's trying to. Okay,
Cool.
that's
There
all
you
I
go.
got.
There you go, Dave. Hope that helped. Let's see. The next one. Does Sean recommend learning to trade binary options on the Nadex or NetX, however you want to pronounce it, or is it just a waste of time? What's your thought?
I have zero experience, and the people that I've come across over the years that have dabbled in it, I haven't heard any over the years. I haven't had anybody say any good things about it.
I'm one of
I don't know.
those.
I don't know if Merlin wants to chime in or not, but like,
No,
anybody that's, I've come across people that have dabbled in it and they said, yeah, I dabbled in it, but I didn't continue to dabble in it.
I've never actually traded them. I've known people who have traded them, and there was always issues. It seems not just with the option, but the exchanges where they were trading those things on. Little shenanigans that go on behind the scenes, and I was always like, you know what? I'm going to stick to options, futures, forex, cryptos, equities. I got too many things to trade anyway. So I guess it's a matter of personal opinion there, but I personally would move away from it.
Yeah. And traditional stock options have been around since the 70s. So like, it's like getting close to 50 years, right? So it's like, I'd rather mess with things that are more, well known, more
Uh,
common.
Mike says, do you use bar chart for unusual options activity? If so, the second question to follow. But do you have a filter that you look at for kind of unusual option activity, something that might be a little bit of an anomaly for that day?
You know what? I don't. I do track kind of. I'm more of like a net change to ATR guy, so I can, I look at the net change per dollar amount, cross reference for ATR, and I trade kind of the same group over and over again. So looking for unusual option activity, that'd be trying to jump on the coolest thing of the day,
Mm-hmm.
and that's not my forte. I kind of like to trade the same things over and over again, the things I know. So maybe call me boring, but I don't really try to track unusual option activity.
I'm not going to call you boring because it's funny. What you said right there is exactly what I did back in the late 90s, right? I would be on I'd have the TV right here of CNBC watching for the big whatever they're talking about. I'd have a watch list showing me all the biggest gainers for the day. And next thing you know, I'm jumping on a bunch of crap that I didn't even know what it was. I have no idea what the ticker symbol is. It's just moving, so I was on it. And while there is something to be said for that because you get the action, the momentum, the volatility, you don't learn any characteristics of that security. So I kind of would prefer, and as I got more mature as a trader, I would prefer to kind of stay with things that I know, a regular group. And the analogy I can make for everybody here is if you invited 50, let's say 100 children over to your house, and you know nothing about any of these kids, just 100 kids coming over to your house, you're like, what the hell is going on? Some are going to be orderly, some are going to be nice, some are going to be cool, some are going to be absolutely demons and just ripping your house apart. But if I have the same small group of, let's say, 10 kids every day, and they're there every single day, not only do I know their personalities, but I might actually be able to work with them and understand how to deal with their personality types, and it'll be a much more pleasant experience. That's kind of how I look at my trading style now. I've been doing this for 20 plus years. Stick with the stuff you're comfortable with. Every now and again, I do go out and venture into some really wild crap, but that's an anomaly now. That used to be my regular.
I I love that analogy. That was great. And I had a gentleman by the name of Nasso. That's what he said, his name, Nasso. Nasso would, give me the third degree, Sean, why did you trade this? And I'm like, I don't know. It showed up on TV. You know what I mean? And so I was browbeaten by a gentleman by the name of Nasso, and very Greek. Sean, what are you doing? That kind of thing in Los Angeles on a trading floor. So that's when I actually started to become master of few. Trade the same tickers over and over again and get good at few, and or good at the 10 kids. Is your analogy? Is a great analogy.
Makes it a little bit easier. Vinay says, how does he decide it's a credit spread? Can be a debit too.
Volatility. So if I look at volatility as a percentage, implied versus historic, Some of you have probably been through like the options class with like the academy or something, the IV gauge. But normally the industry knows it as implied volatility, implied current volatility versus historic. And with most platforms, you can put it up as a percentage. And 40% or lower implied volatility is a debit transaction. 60% or greater would be a credit transaction, because there's a lot of things that go along credit. We want decent volatility to get good premium. On the debit side, be careful, because a high volatility ticker and you buy options, you can get what's called a Vega bomb or a Vega suck. I don't know if you've ever been there where you bought a call and you were in the call for 3 days, the stock went sideways, and all of a sudden you're down 25% of the premium that you paid, and you're scratching your head on why. And because you did a debit trade on a high volatility ticker, like for instance, like an earnings event, and then once the stock gets boring, the volatility sucks out of the premium, and all of a sudden you're net negative on the trade, and the stock really didn't move very much, and you're scratching your head. And so that's why careful with doing debit, and it's a high volatility ticker. Some say that's riskier than actually doing naked options. Now, it doesn't mean I agree with that. But just be careful if you do debit with high volatility tickers.
Yeah. All right, last question, then we'll go to your session coming up here next week or this week, right?
Actually, next week, Monday.
Next week, Monday. All right. So he's got, well, just a second. We'll get you guys the info on his webinar next Monday. Tom says, any tips for screening for sideways stocks besides looking at a lot of charts? And this is, he's one that likes sideways. Give me something going sideways. That's Tom's MO. Do you have anything that you look to scan for those types of opportunities?
I actually do.
Oh.
So I use like, Thinkorswim's scanner, but a cheat code for me is usually mid-range volatility. So like anywhere from 45 to maybe 55% implied volatility, and that's implied versus historic as a percentage. And actually a column you can put in your watch list as a basket column. And so that's kind of a cheat code to find kind of a sideways stock. And then you'll come up with 5 to 10 of them that you just normally know that they're kind of sideways grinders. And you just kind of stick with those. Like, I don't know, one that's always been that way is like MGM. Now, I haven't looked at MGM in a couple of weeks, but that's one ticker that's kind of mid-range volatility that usually is kind of a sideways ticker. And so again, scanning for 45 to 55% implied volatility, oftentimes you'll come up with a lot of these tickers that are just grinding sideways.
Yeah. There you go, Tom. And time to add a little column to your Thinkorswim and see what you can make of it. Tell me about your webinar coming up next Monday. I have the graphic here for everybody. I will copy and put it into link for you as well. But walk us through what you're doing.
I'm doing I guess it's just a give back, and it's a promotion in regards to talking about just things that I'm looking for and scanning for when I trade. And so it's a session 8 p.m. Eastern, I believe. So it's 5 p.m. Pacific time. And it's an hour long. Just come join, have some fun. And I'm going to be doing a session that's Monday evening. And I'm doing some things with Wealth Builder, and I'm doing three times a week live sessions with Wealth Builder now, to where it's like, let's jump in, let's pull up our sleeves, and let's look for trade setups. Specifically, spread trading is kind of what we're doing.
Excellent. And the price is right for the webinar.
Free.
We like free. All right. Well, hey, I told you I'd get you out of here by 2:35. It's 2:34 right now. So thanks for coming on again. I appreciate it. I'm sure we have quite a few people that picked up a couple good nuggets from you. So maybe we'll get you on next month and elaborate even more.
Absolutely. Certainly a pleasure, Merlin. Thanks for having me.
Take care. Have a great day.
All right. Cheers. Bye-bye.
As I was Sean Reed giving us a little insights into unlocking options interest secrets with the graphic here. And, it's funny because people have asked me that in the past. Actually, I think, Tom, you have asked me that one in the past. And, do you look at open interest as a guideline for where to make trades? And I tried for the longest time, but this was back in my neophyte days. I would say back when in the late 90s, early 2000s, one of the guys on the floor was trying to sell me on that too. And he's like, hey, listen, you've got all these options and they're going to expire at different strike prices. So check those and it'll gravitate towards those levels. And I tried to make trades off it, but I guess at that point I just didn't understand options well enough to even, make effective trades using that information. However, what I think was interesting what he showed here today, especially with like AMD, you had that specific demand and supply zones that he mapped out on the chart, and those coincided perfectly with those strike prices, the open interest strike prices on the options chain. So not to say that that's what's going to stop price from falling, but if there's a ton of it there, then that might be one of those factors that adds to that area of demand or an area of supply, which I may incorporate a little bit more into my trading going forward. So hopefully I'll learn something on that day today as well. It's always about learning out here. Let me see. I had, oh, dang it. I forgot to get your question. You even sent this one in. He said, can you ask him if he does covered calls? If so, does he prefer to sell calls on up days as price is increasing or down days as price is falling? I'm probably going to speak for him here. And generally, you want to be selling those calls on up days, right, as price is rallying, because that's when people are starting to buy those calls and your premium starts to jump. If you're selling covered calls, calls against a position you have and price is falling, well, typically the premium is going to be just falling out of that as well because people don't want the calls at that moment in time. So I think he would say that he was looking to sell covered calls as price is going up. Let's see, what else did I have? I have another question. Tom, I didn't even get to your... Sorry, Tom. I meant to go through it, but I had him on a tight schedule here today, and he had to leave real soon. So sorry I didn't get to those couple questions for you. What is the implied volatility column for mid-range? Also available in TradeStation. I don't know. I know he uses Thinkorswim. Most of the options guys are using Thinkorswim. TradeStation's options chain is not that great. It was kind of buggy to me when I was using it years ago. So I don't use TradeStation's option chain anymore. So I could probably dig in there, Michael, and see if I could find it for you. But Thinkorswim is kind of the lead dog with regards to options platform right now. So here's what we have cooking for manana. Let me just quickly get this one out of the way. We'll wrap up here. Tomorrow is a quiet day. At least there's no incredibly powerful announcements like we've seen this week and last week with CPI and PPI. For the world, though, it is going to be a services manufacturing day. You can see we've got the European Union, you've got France, you've got Germany, you have the UK and the United States, all with flash services and flash manufacturing numbers coming out. And for the U.S., you also have durable goods orders, which surprisingly, they're expecting to see a surge in durable goods orders. You see it expected to go from negative 4.5% to 0.4%. So that would be a nice increase to see that. Although the core durable goods, when you strip out transportation, is expected to decline from 0.8 to 2.3. Let's see on the ES. Is that a head and shoulders on the day? We haven't even looked at today's markets. Why don't we do that? Skilled stock have been always trying to prolong the show. I know what you're doing over there, buddy. Let me go here, go up to the ES, and would you call that a head and shoulders? Let's see. On the ES, is that a head and shoulders on the daily with a neckline at 39.50 or 38.50? Personally, I would say no. I think you're looking here, something like this. I got snap mode on. I know that there's a lengthy delay here. I'm going to actually leave those gray lines on, but I think you're looking at this this line right here that I will color. We'll make that one a nice blue line, right? So let's use that blue line. I think you're looking at this blue line and saying that is your head and shoulders line, right? Well, I personally would say no. I don't think that is the line I'd be looking for head and shoulders. It's kind of subjective and at too much of an angle. All right, if you did it right there. So, no, for me personally, no. No need to check implied volatility, you just did, and there isn't. Bummer. Sorry, Michael. With TradeStation, I will tell you this. If you know Easy Language, which is their programming language, you can probably create it, but that might be just more effort than it's worth. Now with things like ChatGPT, you may be able to just type into ChatGPT, create me an easy language code to identify implied volatility that is between 45 and 55, and it might actually write out that code for you, but that's a little bit above my pay grade at this moment in time. I'm not a coding person, unfortunately, but there are good community groups out there that may be able to help you out, Michael, in looking for that specific code that you could get from the community and then drop in to the platform. Looks like a rising wedge triangle on the ES. So yeah, that's why I've drawn out here, at least in the gray parts, kind of this triangle formation, which I'll go back to these lows, and you could do it from there, but I did it to the real bodies. You just have this compression, and I actually today did the exact opposite of what I thought it was going to do. No, you guys, it's exact opposite. I actually thought that we're going to see this drift back down a little bit lower today, and then come towards the bottom end of this range for the S&P, and then bounce back up and continue in this sideways channel. As you guys know, we were pretty much from the races, gap up and kept on going. And or not kept on going, but gapped up and stayed up. One of the trades I was looking forward to was NVIDIA, right? When that one was brought up yesterday, I was like, oh goodness, this looks like a great trade. However, didn't even come close to being a trade today, so fine, move on, find something else to make a trade off of. So kind of a unique day. When I look through the numbers though, let me just start from the bottom, work our way to the top. Crude oil down 1.33% on the daily. We mentioned that it was coming into this area, which was demand, the bottom of this yellow box, broke down below it, rallies back up. Thought, well, let's see if it holds it. It actually did today, so that's for those that believe that this trend break, right, this sideways consolidation break to the south side, if that is in fact the case, then you will see tomorrow and the next few days drift lower for crude oil here. Russell 2000, 0.49% slide, still sticking right to this 1732 mark. I've mentioned a couple times, kind of looking for a close below that. We've tiptoed below it intraday, but we have not closed below that one yet. So anybody who's holding on to the Russell here, this is your line in the sand at this moment in time. Now, S&P 500. Really not much to speak of here from an end of day finish, right? We have a lot of chop going on. I already mentioned this. I thought it was going to drift down lower today. We didn't get that, which is fine. Doesn't always do what I think it's going to do, and that's just the nature of the beast. But all in all, you're at a relatively unchanged day. Right now, it's up 0.19%, as is the Dow Jones Industrial Average, which with almost the exact same picture. All right, getting to the positive stuff, NASDAQ was up over 2% today. One thing to take note of here on the NASDAQ is notice these last 2 days. You have long topping tails, which tells you that in both days, both today and Wednesday, you had much higher prices, and then sellers came back and ultimately pushed it lower. So that is, even though you have a big green candle today, it's somewhat bearish that for the last 2 days, sellers came in and pushed things lower. So we'll see who ends up winning this battle going forward. Right now, it's respecting that 13,094 line that we have there at the top in red. So map that one out, which goes back to an area of supply that goes all the way back into August of 2022. Gold. Oh boy, my silver might get taken away from me tomorrow. We had that little pullback for a couple of days off of that $2,000 mark on GLD. This is the gold futures here. And then yesterday kind of hesitated, almost looks like today. Today's candle on gold looks like the S&P candle for today and some of the other markets. And then gapped up, continued to rally most of the session here. Did not close above that 2,000 mark, but we did breach 2,000 today, hitting a high of 2,006 on gold. And then SLV. Again, I have the $21 calls against my long position, so got covered calls, and I might lose my silver might disappear tomorrow. I'm hoping that tomorrow afternoon it closes, as I mentioned, $20.99, and I'll sell that 22 or 21.50s against it and make a little bit more. But either way, it'll be a great trade for me. The big leader out there today, Bitcoin, and I won't spend a lot of time going through this, but it is an absolute shit show what's going on with cryptocurrency right now. If you're not paying attention to the news, in the crypto investor program, I actually talked about what was called Operation Choke Point, which was something that came out under President Obama, where they were going after banks and limiting banks, telling banks don't do business with these types of businesses and this types of business, and choking those businesses out. A guy named Nick Carter, who if you are in the crypto space, you should be following him on Twitter. He's one of the brighter minds out there, really intelligent guy. He released a paper called Operation Choke Point 2.0. Which is really the same approach that under the Obama administration, but going after crypto. So yes, you had Silicon Valley Bank screw up because they were bought a whole bunch of long-term dated maturities, yield curve flipped, and all of a sudden they lost billions of dollars. You had Silvergate, which did not lose billions of dollars, but voluntarily unwinded because of regulatory pressure. And then you had Signature Bank, which did not unwind, did not go under because of lack of funds, but the regulators in New York seized that bank because of a lack of confidence in management, and those two banks are your primary on-ramps into cryptocurrency. So the regulators right now using this financial banking crisis as an excuse to sweep in cryptocurrency banks and prevent cryptocurrency from growing in the United States. From there, it's even more interesting because what you have now is the SEC has now sent Coinbase a Wells notice. If you guys don't know what a Wells notice, it basically means we're coming after you and we're going to sue you. Yet Coinbase has made every attempt publicly, said, SEC, we would like to know what is an unregistered security so that we can register with you. And then the SEC tells Coinbase, you need to register your unregistered securities. Could you please tell us what it is that is an unregulated security? And the SEC says, we're going to sue you. And that happened today. They got a Wells notice last night for Coinbase, which is why you saw such a huge drop here in Coin. Let's check out Coin's chart. Right, Coinbase was a pretty hefty down day today, down 14%. But the onslaught for crypto was nuts. Do Kwon got arrested in Montenegro. You had Justin Sun now getting lawsuits against him, and Tron, and BitTorrent, and Lindsay Lohan, and Lil Yachty, and all Akon. All these celebrities are getting sued right now because of promoting and pumping crypto. So it is an all-out onslaught on cryptocurrency at this moment. And the irony is, look at the price of Bitcoin. It's like as soon as these regulators were really going after him, it's rallied even more. I think part of that is people are pulling cryptocurrency off of the exchanges. I would highly recommend you do that. Put them into self-storage here. It looks like under the current administration that the on-ramps to crypto will get taken away, meaning you won't be able to pull your money out. So if you want to convert back into US dollars, they're making it really hard. You can't go back into your bank account with US dollars. They're saying, keep crypto. Keep crypto. We just won't let you do anything with it in the United States. So kind of crazy, but hopefully that will change over the next few years. If you go to, let me really quickly bring this one up. It's I think it's Operation 435. Damn it. I can't remember off the top. I'll show you guys tomorrow. But Coinbase started up something. I think it's called Operation 435, which is how many elected officials there are in Congress. And it's really designed to be a grassroots, let's let our politicians hear about this stuff, because banning cryptocurrency is kind of idiotic. It benefits the big banks, right? If cryptocurrency is a fundamental threat to our banking institutions, because our banking institutions make all the money off of you, the depositor. Well, why shouldn't you be able to do that yourself with self-custody of crypto? So that is the crazy part of cryptocurrency right now, is just this assault that's going on. And I have a feeling it's going to get uglier. Other than that, not too much noteworthy. You see here, we do have a little hammer formation that formed on the dollar index right now, which to me is very nice. Let's see a little bullish move up here in the dollar tomorrow. Again, if we do get this to follow through and have bullish move up in the dollar, that most likely means that our equity indexes will start to hurt tomorrow as well. Other pieces out there that are noteworthy, that 10-year just continuing to drift lower and lower. Slow drift today, down 0.52% for the 10-year, and our inverted yield curve is getting a lot better. Here is your 10 and the 2. It could be actually back to normal yield curve here in a short period of time. Okay, Merlin, who is for you the best futures trader that you know? Can you bring him on the show? I don't really think I could say that someone is the best. I think that everybody has their own different little things that they do well. Everybody does things slightly differently. You look at somebody like a Bob Dunn, right? Bob Dunn is a much more longer-term approach type of trader in the futures markets. Actually, I'm probably have Jerry Baldwin on the program next week. Jerry Baldwin is shorter term, and he's just using indicators to help him make his decision process. So very different than the way Bob would do it. I don't know. I brought on a lot of the traders that I like. Michael Curtis says I'm already here. That's pretty funny. Like I say, banks are taking over. Yep, absolutely. They're going to try to crush it, but we will survive. Can you recommend a crypto website to track for tax purposes? Owen, I can't. I don't use any. So I don't use any tax software for crypto. Unfortunately, I do all mine manually, and I just tell the IRS, here's how much I bought, here's how much I sold, here's my profit or loss, and I give them that number. I'm definitely not hiding anything from the IRS. Don't want to do anything like that. Vinay says, you noted down NVIDIA as a gravestone doji. What did you do with it? Nothing. So with NVIDIA, there was no trade, didn't follow through. So again, you have this level right here. My rule is, I'll color code this for you. But if this is the candle right here yesterday, if it opens up anywhere in that yellow box, anywhere above that dashed red line, I'm fine. Great. And then if it drops down below that, that's my shorting opportunity. It didn't happen yesterday, so no big deal. It's funny because I'll get emails every now and again where people are like, oh, well, you're wrong on that trade. You lost money. It's like, no, I just didn't make the trade. That's what I like about having rules like this. It's very simple. If this happens, then I do this. If this happens, then I do that. That's as binary as I can make it and not get emotional. So, for example, let me just draw a little line right here. Let's say that where this blue line is, that's where NVIDIA opened up today, right? Well, that's a no trade for me because it didn't open in the blue. If NVIDIA opened up right here where the blue line is, actually where it did open up today, okay, fine. I'm still not making the trade. I'm waiting for it to fall down below. It'd have to go like this. And once it gets below here, then I go short. And again, this is not to say your rules. These are my rules. And you might, over your trading career, modify that to fit you. I put those rules in place because I had this tendency to jump into trades too early. So if it gapped up, I just all of a sudden short it, and then thing would run like it did today and cost me more money. So have rules in place so you don't get burned like that. Michael Anthony on CSX has insiders buying up shares in 4 different 13 GA after earnings, SEC filing the company's website and raise the dividend. Okay, you got to be careful following that stuff. So if you look at CSX here, so one of my favorite situations I've ever seen in my life was on Chesapeake Energy. So yes, you have people buying here, right? You've got, and I'm taking your word for it. I have not gone out there and looked at the SEC filings, but I'll just assuming I'm taking your word for it here, Michael. If you're looking at buying this thing, again, you're catching a falling knife. This thing has been trending down since November of 2021, lower lows, lower highs. And just because an insider is buying does not mean that security is going to go up. The best example I have of this was CHK, Chesapeake Energy. Now, unfortunately, I think that they restructured, so the chart won't show me that data. Yeah, they restructured back here in 2021. But Aubrey McClendon used to be the CEO of Chesapeake Energy. And I was watching the insider buying list, which you guys can find that at pretty much any financial site. I'll bring one up for you just so you can see it. And Aubrey McClendon was the CEO, and he was buying hundreds of millions of dollars. And I was like, dude, I'm buying. This guy is loading the boat. He's got to know something, right? So I would sit there and I started buying some, not a big quantity. I was, didn't have that much money to throw at it. But I was buying Chesapeake Energy with the thought it was going to keep going up. And it started to do pretty well. And then all of a sudden, he started getting margin called. And that security fell so much. It fell like 90%. I think you can actually click on any security, right? Yeah, here's your insider buying and selling. So you can see different buyers and sellers here. So if you wanted to, I could type in CSX. I remember some people have automated buying schedules, so it might not be that extraordinary, but I'll scroll down here at the bottom and you can see the upgrades and downgrades. There's the news. Oh, this doesn't show me the insider. There's only one insider trading piece here, and that is John Zillmer bought on July 6th. And that actually sold. So I don't see any new filings for CSX here from a buying perspective. Now, they may have filled out the forms to buy it. Maybe they have not bought yet. All right. Man, I'm going to not go over an hour today. Real quick, where would you set your stop on NVIDIA? Normally, Robert, it's going to be above the high of the shooting star candle. But that one was really long, so I'll probably just go a multiple of ATR. So depending on how I'm executing that, I'll use ATR to gauge what my time frame for entry is. So if I'm more of a day trader, I'll probably go and use a 15-minute ATR and use that as my intraday stop loss. If I'm more of a swing, I might go a full daily ATR. Let's see, Oliver Ware's a Merlin question. Can you load your crypto into a ledger for any amount, correct? For instance, if you have 500,000 Bitcoin on Coinbase and you want to move it to a ledger, if you had every dollar in the world, every Bitcoin in the world, which at this point is over $400 billion worth, you could put it on a ledger. Remember, it's just a piece of code. It has nothing to do with the quantity of Bitcoin. It's just a piece of code that says you have what's in this wallet. Your Bitcoin actually doesn't even sit on this, right? It's not sitting on this device. Your Bitcoin is sitting on the Bitcoin blockchain. This just tells you where on the Bitcoin blockchain your crypto is, and this keeps the keys. All right. David says, in a previous conversation, you mentioned that you put more weight on higher time frame zones, daily and hourly. How much weight do you put on the weekly time frames? This is just personal preference, right? It's like saying, what kind of drink do you want to get when you go to a bar? I'm gonna be like, okay, give me a Cosmopolitan, or give me a Manhattan, right? Old fashioned. I'm a whiskey guy. With the charting timeframes, I don't really like to look at the weeklies. I know I'm gonna get hate mail from this one. To me, the daily chart's my favorite. When I'm curious about what the really big picture looks like I did there with Chesapeake, I'll step back and I will go to the weekly time frame. But normally my high time frame analysis is the daily, and I worked out from there. That's just personal preference. Ledger being sold at Best Buy, secure, better to buy direct. Michael, even though I trust Best Buy, I would go direct from Ledger. Look, if I was a bad actor, let's say I was just a shady SOB, I could go to Best Buy, As an employee, I could take the pallet of ledgers and take them home. I could take a razor blade, take the piece of plastic off of this case, open it up, get the seed phrase, seal it all back up, and just put it on the shelf. And a year later, 2 years later, 10 years later, I've got this list. All I have to do is put in that seed phrase, and I have access to every single crypto in that wallet. So I personally just go to the source. It's not worth it. Never buy it secondhand, for the love of God. Don't do that. And do not buy it on eBay. Buy it original. All right, I gotta go. Big Eb is Big Eb is not here. No. We have to wrap this one up. All right, so tomorrow's Friday. I know Not Bad Whiskey had a rough day today. Cheers to you on that one. I know that you're having an early glass of whiskey, but I will join you tomorrow for a nice frosty beverage. I'm looking forward to a nice weekend. It has been just a couple of really just crazy weeks for me. I'm sure you guys as well are feeling almost overwhelmed with just the amount of information, economic data, fundamentals, technicals, financials. These markets are nuts right now, so trade a little lighter tomorrow, relax. It shouldn't be as volatile just because of the economic data that we mentioned there and no real earnings to speak of. That's it. Have a fantastic remainder of your evening. If you got questions, comments, feedback, put them on the YouTube channel. Any video, I will see those comments and put them into the slides for tomorrow. If you got a topic you want covered, email me at TraderMerlin@gmail.com. See you tomorrow, everybody. Take care.